welcome to another powerful session, ladies and gentlemen, at ETBFSI Virtual Conclave. And this particular session is about how to make money or how to build wealth digitally. And I have with me four powerful speakers from the sector. My first speaker is Mr. Vijay Chandok, the MD and CEO, ICICI Securities. Mr. Chandok, welcome to this discussion.
Thank you very much. Pleasure to be here.
Thank you, Mr. Chandok. My next speaker is Mr. Dhiraj Relli, the MD and CEO, HDFC Securities. Mr. Relli, glad to have you here.
Thank you so much. Pleasure is all mine.
Great. My next speaker is Mr. B. Gopkumar, MD and CEO, Axis Securities. Mr. Gopkumar, glad to have you here.
Thank you.
And my next speaker is Dinesh Pangtey, the CEO of LIC Mutual Fund. Mr. Pangtey, glad to have you to this discussion.
Thank you. Thank you very much.
So, gentlemen, to begin with, the brokerage industry, or specifically the brokers or the stock market, that has been, far more aggressive in digital adoption than many other sectors. In fact, DMAT and everything, what we do today is, far more aggressively happening in the stock market about the digital adoption than any other sector. So to begin with, I will come to you, Mr. Chandok, and my first question to you. In fact, this is the common question I would like to ask to all of you. And to begin with you, Mr. Chandok, broking industry was one of the early adopters or movers when it comes to adopting technology and evolving constantly. Now, what is it that you think will make a difference when customers want wealth to build on digitally?
Well, you're very right. I think one of the most digital industry, perhaps in the country, has been the broking industry, and it's not like it's happened in recent times. We've been digital for a fairly large number of years. Given the changes that have happened particularly in the last 2-3 years, with the growth in the digital and the strengthening of the digital infrastructure, the convergence, the coming together of advanced analytics, and the convergence benefits that are possible as a consequence, I think it's just unleashing a whole new world of opportunity. And particularly, when you talk about wealth business, I would say wealth business is a big ask in the market. It's a big need gap in the marketplace. The challenge has been largely that proper kind of wealth services have not been one has not been able to reach out at scale. Because what is important is providing consistent service at scale. And that's why whatever wealth outfits have got created up till now have all been, in some sense, I would say, boutique style offerings. And clearly, I think the changes that have taken place in the last few years, particularly, throws open a huge opportunity to create a wealth experience, a wealth platform, a wealth offering to Indians at scale and at quality that is required to maintain consistent growth of this industry. So I think time really has come.
Right.
And I think our industry, players in our business are very, I would say, appropriately poised to take advantage of this opportunity.
Okay. I mean, yes, the companies are already taking opportunities and the benefits of the digital adoption there. What next? Let's understand from Mr. Pangtey as well. What is your view? Because like Mr. Chandok said that you are an early adopter and the brokerage firms have been adopting digital far more aggressively. What is your take? What next for you now?
Yeah, I think the biggest game changer, which rightly pointed out, has been on the exchange platform, where the ease of doing business has been so convenient. And the game changer has been, to my mind, the direct market access, which started. Actually, that was the real game changer. And with, I think, a lot of issues got resolved because of this unique ID, Aadhaar. And the cloud computing has given a lot of, the hassle-free services to the brokers. And of course, with robo technology and all other things getting in, it's become really a torch bearer to the digital initiative which we are taking. And I believe going forward, of course, this blockchain And AI will be playing a very, very vital role in further making the process more better and more convenient.
Thanks for introducing to those parts. We'll obviously go deep into those parts as well. But Mr. Gopkumar, your opening remarks in terms of how the industry has been adopting digital and what next according to you.
We are the only one industry which is 30-year-old fintech. What happened after the whole ring moved to trading? I have seen from typically people used to go to internet parlors to trade to the now to the mobile. I've seen amount of changes happen for last 30 years is so huge in the industry, and people still don't believe that we are part of the fintech industry. I think people still believe that we are still a broker. I think in all sense, I think fintech industry existed 30 years back in the country, because I should thank the regulators and exchanges what they've created this ecosystem so well for us. Having said this, the wealth industry is changing at large. I think I certainly agree with Vijay that even today, what we have done in the industry is that we have converted a physical into a platform business, in the sense that we're still a product pushers. There's a lack of getting a financial planning tool or a need assessment. We are still looking at wealth accumulation, not a goal-based thing. So in that sense, I think we have a long way to go. Even if you look at new players coming in, also are looking at the same space, but I think there are less amount of people looking at and giving a solution to a customer. An interesting change, what has happened for the last 5-6 years, is that a lot of savers have moved to investors. I think that's a change what is happening. I think that's where the industry is growing. I think I certainly agree that mass affluent businesses which exist, I think only scalable technology can reach these customers. And idea is to build, how do you build informed investing where customers take informed decisions before looking at any of the financial instrument, and whether the risk assessment is right or wrong. I think that's where we need to look at. But most platforms, what present in the industry is looking purely from a product pushing. And the need of our industry is also looking at and saying that are the wealth management firms which are driven by technology can be given all the asset classes on the same platform. I think work in progress. I think our ecosystem is now supported to build that. I think a lot of products what we build is around all the asset classes today. And for example, we never thought in the industry that we can be a real estate product called REITs coming into play. I think the REITs are coming into play thanks to, so that's one of the asset classes getting opened up for investors to look at from a real estate exposure perspective. There are bonds and debentures now available in the platform for retail guys. We are just not an equity guys. I think when I said in my opening remark that we are not only a broker, I think the fintech existed 30 years back. I think we were part of the whole revolution of fintech. I think I do believe there are huge opportunities to build on a scale. I think technology will reach large. I think, especially in this scenario for last 1.5 years,
Right.
People are moved from bigger cities to smaller cities. Right? And how can we cater through Bharat is what this technology can create the platforms across.
Mhm. I think valid points, Mr. Gopkumar. I think thanks for you touching that, the fintech part. In fact, I'm going to add that into my discussion because fintechs are changing the face of financial services, not only just obviously the brokerage firms or the stock market. In fact, they have also created a different demand in the market in the last couple of years. Mr. Relli, how has been your observation in this particular sector, and what is that is coming in terms of digital that you see?
BFSI industry as such was the earlier adopter of the technology. Within the BFSI space, I think bank did a better job. And then when it comes to the broking space, we were born digital. We disrupted the physical broking. Cope just touched about going to the ring. So when we started HDFC Securities and many more players, they disrupted that piece to almost a digital offering. We offered 3-in-1 solution, which linked saving account, demat account, and trading account, and gave a seamless experience to the customer. And since then, the broking firms have been on the forefront to adopt the ever-evolving technology to give a better experience to their customers. I think where we got the acceleration, one is that the regulators, like Cope mentioned, that SEBI and exchanges, they paved way for the digital acquisition. And also, we could able to develop new products. We could able to offer products with in such fashion that they meet and exceed the customer's requirement. So to that extent, I think assimilation of technology by investors also helped us to a long extent. And last but not least, in the last 4 or 5 years, Jam Trinity and advent of smartphones. I think these are the few trends that enabled us to serve the length and breadth of the country. And if you ask me, financialization of savings is on the cusp of exponential growth. We have just scratched the surface. We've seen only tip of the iceberg. Only 18 million customers are active on the stock exchanges with one trade in India, despite the spurt we've seen in last 1 year or so. So a long way to go. And I can go on and talk about the similarly on asset management industry with just about 97 folios, and unique folios could be only 40 million or so. So in a country of 1.4 billion, we really have long way to go in terms of a penetration. And I do believe the technology and digital are one of the big pillars and enablers of the growth.
Okay, I think valid points, gentlemen. I think many of you touched really important points, whether the new technologies like blockchain, AI, or even the fintech platforms, the different asset classes, and, Mr. Relli, your point specifically about penetration and all. We are going to discuss all that perhaps more into detail. But let me tell you, you belong to a sector which is very, very lucrative. Being a business journalist, I have often been asked by people, oh, you're a business journalist, tell us which stocks to buy. That is the first, encounter that I always had. But to begin with now with some specific questions, Mr. Chandok, I will come back to you. And when we say that brokerage firms were born digitally, BFSI companies adopted digital far more aggressively. Could you just tell me how is the customer behavior shaping up as the digital becomes the preferred mode of managing wealth today?
I would say the recent pandemic seems to have, if at all anything, front-loaded the entire digital opportunity for players across industry and certainly across our industry. When I say that, what I mean is that I'm finding that more and more individuals are quite happy to come do it yourself, come on digital platforms and transact, engage. And it's not just, I would say, the younger cohorts of customers and investors, but it is actually now getting extended to the more mature investors as well. They are pretty comfortable coming online, either on a phone or on their iPads, and then transacting and interacting in a completely digital format. We are also seeing HNIs do that. Otherwise, they have been sort of used to having people over to their office or their homes at their time. But I hear they themselves saying that it's okay. They prefer to engage digitally in the current context. So that behavior shift seems to have sort of clearly and firmly taken root. A lot of people who have not been very tech savvy, as if I can use that word, actually you can see them making the effort to pick up, and then they realize it's pretty easy. It's not tough at all. They start off in an assisted fashion. There is a conversation that takes place, and it's kind of an assisted embracement to the digital channels and platforms, and then pretty much they realize that they've always missed. They've probably missed doing stuff that could have been done so easily, and they are quite comfortable continuing that way. So clearly, front loading of the opportunity is visible. I can clearly see also customers now expecting that the technology is intelligent. They want to be recognized for what they are and not treat them as just every customer as do it yourself, because people are expecting that why, when he has so much of information sitting on me, why can't he sort of understand me better and do things using all this information and technology to my preferences? So clearly, there's an innate, unstated expectation of an intelligent engagement and not just a transactional engagement. And they look for curated solutions. That's another shift expectation that is taking place. They want to deal with somebody who's done a lot of hard work, done all the research, done all the fact finding. But they're saying that, okay, I'm not going to be reading every damn thing that you put through in that report. Tell me the gist. I just want it at a glance. So give me a package deal. It's much like, food that you get off the shelves, eat and eat. They know there's a lot of hard work that has gone behind the making of the food. Its ingredients are all right. The blending is all perfect. I like the final output, which is a homemade style, whatever I'm getting out of it. But I'm just going to heat and then eat. And that's the kind of expectation they are having, even with the financial products. So curated, ready off the shelf, hard work done by people like us, and then presented in a digestible format is something that is coming. And by and large, I can see people getting a little more experimental. So I think clearly these 4 or 5 shifts in behavior, I'm able to see on an ongoing basis.
Okay. Valid points, Mr. Chandok, and very informative. Mr. Gopkumar, I would like you to add here, and if you could tell me some examples about how are you building wealth for your customers at your company? Because now the customers are looking for curated solutions, as Mr. Chandok said. And I remember one important line of a top CDO of one of the top bank of India. He said that customers want Swiggy-like experience. Customers wants me to give you a Netflix-like experience. So this is where the customer journey is heading. So how are you actually? Would you like to interpret your own version?
Interesting question. I think 2 or 3 things. I think broadly 2 things which we and our industry also look at. It's not that we are quite different from the industry, but thought process is similar. That one of the pillars is that how do we educate customers much easier? I think people have tried different ways to do it. I think this pandemic has given a huge opportunity for us to build a platform where we can reach digitally to quite a number of customers. I think historically, we would like to look at, we used to do classroom way of educating customers. We used to PR as a platform. But today, the way we are looking at is that how can we use customer education platforms much better? I think there are people working towards our ecosystem and developing this content and able to deliver it much easier. Second pillar is always about how are we trying to look at financial planning and how can we build the financial planning to the customer towards sense, because most of the people do have financial planning tool, but it's skewed towards some products. But how can you do an unbiased one? More importantly, if you look at these 2 pillars and you can talk and say, how can we, customer can take informed decisions? How can we empower customer to take more right decisions? I think that's what is happening in industry, and that's what's happening in our platform, saying that let's build a platform which customer can take informed decisions. So having said that, so I agree with Chandok that people require more curated baskets. I think there are a set of customers looking at baskets. Some people are looking at mutual fund baskets. People are looking at more specific thematic tools. More important is that there are a set of customers, that is typical person of customers want to look at charts and ability to translate chart into a simple algorithm where customers need not go and get trained themselves into reading charts. I think this is what getting evolved now. And idea is the underlying theme still exists, saying that how can you take customer informed decisions and how can we empower customer to take decisions. I think more and more social media connections are happening. I think in that sense, customer education and empowering customers is going to be a factor for our platforms to grow now. Because otherwise, we are still going to be a very straightforward buy sell platforms, and we nothing to add much. I think customer expectations are much above what we're trying to offer. I think even though you can argue with me saying that, okay, why are we going to your own platform? There are social media that are giving a lot of content in terms of customer education. But more importantly is that how much is authenticated that information? In that sense, that is it independent way of learning modules? My question is that some people are biased, some people are being very independent about it. And interestingly, is the people who are giving unbiased information, they don't have products to offer the customer. I think our whole journey is to bring this together and try to build a platform which is so powerful for customer to take decisions. I think that's what is happening in the industry.
Well, true. I think that awareness point is very, very valid, and people should not also trust blindly to the information available on the social media. As they say in the medical language, that do not believe any prescription, you may die.
See, if you look at from Twitter, right, or look at Twitter, I think every 1 minute you will find somebody saying, I bought this and I've sold this, right?
Right.
I think
true.
Too much of exposure of information is available in the market today. I think our job is to ensure that we are able to curate it and able to give a customer an effective way of communicating customer so that he can take an informed decision.
So, Mr. Pangtey, I will come to you also partly discussed about the technology, but since we are discussing how the companies are using digital and technology to build the wealth for the customers, what is it that you are doing at your company to build the wealth of the customers? What are the technologies that you are using? What are the changes that you are making maybe in the profiles or portfolio building or something like that?
Well, this pandemic itself was a great teacher because suddenly from nowhere this lockdown happened. And it was very important for us to really change the way we work. Not only we, all the AMCs, they got attuned to this changes. And like business on emails, we started the business on emails through this BCP model, and we were able to really sustain it. And as we, of course, as going forward, we would like to have more aggregators getting into this space. And even at our end, we started our investor awareness program in a big way. We could get a lot of, because this was the time when the lockdown happened, and a lot of distributors who were not technologically well off, they had to be really we hand-holded them through various initiatives, of course, digitally, to bring them out MFU and other exchange-related platforms. To me, it will be very important to really partner the right kind of fintechs because in mutual fund industry, as we know, there are only 2 RTAs, and a lot of things are yet to be done for both the RTAs. So we are looking forward a more robust system, talking to them, engaging them. We are engaging them on almost on weekly basis to see that the efficiency of the system, it improves. In this AMC, unlike securities, we have this what you call dependence of RTA, because the entire complex is the entire structure is pretty complex, and that's where we believe that right partnership with K Fintech is going to be really very important for not only our AMCs but other AMCs as well. And we are very proactively looking into all those kind of MIS which can be possible to be built so that the entire journey is seamless, and the customer experience to really get to the product is also seamless. These are what we intend to do going forward.
Okay, Mr. Relli, I would like you to tell us more about different asset classes. I mean, when we look at the wealth creation and all, we somehow have only those limited asset classes, and maybe that is also one of the reasons now people are also looking at cryptocurrency, maybe whether it can be a different asset class. Maybe that question on cryptocurrency I will take quickly at the end. But I would like you to explain more about the different asset classes, how difficult it is for companies like you to maybe shift it to a digital platform, okay, and then allowing customers or creating a customized platform for them so that it will be really beneficial for them, because not everybody is well versed with every asset class or something like that. So one, how are you revamping your own asset classes for a digital suite, and how are you in fact asking customers, or how are you making it attractive for the customers so that they can go for that?
So before I go to what we are doing, how in terms of providing various asset classes and meeting customers' expectation on various asset classes, I'll give you a brief perspective on how the journey has been in India on asset allocation. We all know that asset allocation is the one strategy that was relevant 3 decades ago, is relevant today, and will stay relevant even in next decades to come. But unfortunately, in India, we have seen late adoption of equity, and our Indians are more primarily were focused on the physical assets, whether it's real estate or gold, or in financial assets, they were focusing more on the fixed deposits. Maybe fixed deposits were easily accessible to them through the banks or post office or through other route, and equity was not that clearly accessible or credible. So I think the both accessibility and credibility makes a lot of difference. And somewhere, the volatility in the equity as an asset class obfuscate the real value of the asset class. Though we all know equity in a long term will beat the inflation and has been beating the inflation, but somewhere the overhang of volatility hog all the limelight in as far as equity is concerned. So that's the sum and substance of the various asset classes. It's important for us to help customers to understand the asset allocation. 9 out of 10 customers still do not know their asset allocation, do not plan their asset allocation in a well-informed and structured manner. So it is more of a push, more of a instigation, more of a engagement that drives the asset allocation. And then once they arrive at an asset allocation, then we help them with the different asset classes. So by and large, as a broker, we are perceived as a broking house that provide equity and equity related products. But over the years, we've realized this as a need and have been adding various other asset classes like fixed deposit, corporate fixed deposits, mutual fund, serve all possible asset classes, and also some of the long-term solutions like term insurance for our customers, which is part and parcel of the financial planning. And now with the advent of newer asset classes like REITs and InvITs, it is helping us to give them a proper asset allocation. Retailing of Government of India securities is still at the nascent stages. Once that will evolve, I think more meaningful asset allocation through financial instrument will be viable.
Okay.
Yeah,
sure.
Ask me the examples we can give in terms of what is changing in terms of asset classes. If you look at bond and debentures, where largely what access to where they can trade through a WDM platform. The process of running through is very difficult. So usually a ticket size above 5-6 crores only we used to allow them to do a WDM trades. What we have done is that we thought through saying that how can we detailize it? So there's a huge opportunity where there are bonds, corporate bonds available at 6.5%, 7-8% yield, and going the interest rate scenario going on at 5.5% on FDs. There was a lot of interest, but I think there was only access to an HNIs and a WDM platform. So we built a platform along with the fintech, which is a B2B fintech, and created a retailization of the whole bonds and debentures.
Okay.
And you can, these same debentures are available from a 2 lakh face value to a 10 lakh rupees face value. And more important is that we made a customer journey so simpler for customers, and it opens up to a large opportunity for us to provide to the large set of customers.
So I would like to come in here.
The world is changing in terms of creating a solution around it.
Okay, sure.
Yeah, I would like to come in here, if I may. In addition to some of the stuff that Dhiraj and Gopa said, we're also seeing that money flow taking place into asset classes like commodities, asset classes like currency, and we offer all these on our platform. Interestingly, investors are also seeking diversification across locations. So there is a fair amount of interest of investors wanting to invest perhaps in equities or fixed income, but in the US markets, for instance. So we offer global investments through our partners who are on ICICI Direct. And through that interface, one could buy either fractional or full shares of a Google, of a Facebook, of an Apple, and so on and so forth in the US markets. So that's another very interesting emerging diversification which is emerging for investors in the markets.
Noted that point. Thank you, both of you, for adding some extra inputs there. I have one or two very important questions now, and those questions are specifically about the partnerships. Banks, insurance companies, all the financial services companies are doing huge partnerships with fintechs now. And Mr. Pangtey, I will come to you because you also gave a good information about this some time back. What kind of partnerships you are having with the fintech companies right now? And what are you gaining out of this collaboration?
Well, there's a huge huge lot of opportunities to get in the fintechs, be it on the HRMS module or be it on the CRM, so be it on the sales module. So in fact, we have started with 2-3 packages already in place, and we look at it because this is the dynamic which will provide. Because unlike securities, AMCs have a different setup. And as I said, we have issues because of this RTA is only two numbers which are there. So we are looking into a lot of diversifications, and there where which I have already stated earlier, finding a right fintech and where the trust, where we could go on a long way, that's very, very crucial. And I believe for all the CRM solutions, for for almost all spheres of our business, be it risk, be it day-to-day trading, on all these platforms, it's very, very important to really choose a right partner, and that becomes very, very vital for a long way, and important for us because the industry being so dynamic, the changes are happening so rapidly. The SEBI regulations, many of those what you call outsourcing or getting other tech firms into the platform is also driven by the SEBI's continuous getting new regulations, be it on cyber security, be it on any other issues as well. So that's what is making our business more costly also. At the same time, a lot of proaction is required to be done so that we are able to see what are the changes which are going to be envisaged in shape of because that trust of the client, the customers becomes very vital. And SEBI always tries to protect the investor's interest. And whatever it takes to protect the investor's interest, they come up with some regulations. And many of those things cannot be and will not be able to build unless until we partner with a lot of fintech companies. And precisely in the last 2 years, we have at least had 4-5 such tie-ups. And going further, be it even on distribution of the product. So a lot of things are happening, and in future also, we are proactively looking into such engagements to see that our business, that trust which the customer reposes on us is upheld with continuous upgradations and the seamless services which we like to provide to them.
So here I would like to pitch in broking industry per se, we've been, the early adopters and early collaborators with the fintech. And if you look at it, not only for onboarding engagement, but also for a value addition, we've been leveraging fintech industry. So Vijay mentioned about the global investing. We also offer global investing through a fintech partner. We have curated baskets through a fintech partner. We have portfolio optimizers for our customers, whether it is equity or a mutual fund, whether the asset classes are with us or with the other distributors or other partners. We help them with the portfolio optimization. And, all of us, I think I can talk on behalf of HDFC Securities and also on behalf of industry. I think we've been leveraging fintech fraternity to add value to our customers.
Okay. But, valid points, Mr. Relli. Mr. Gopkumar, I'm sure at your company also, you must have been partnered with a lot of fintechs or even startups who could help you in some manner, whether operations or, acquiring customers or something like that, or doing some basic maths of how to create a wealth, maybe some calculations. But my question to you, and maybe all of you can quickly add to it, has partnering with fintechs or is it adopting digital aggressively help you really in manner of increasing your pie? Because the penetration has still not increased in far more exorbitant manner. The penetration or the pie is almost the same. So whether adopting digital or whether partnering with fintechs, is it really benefiting the industry at large?
Yeah, interesting question, because if you look at two things you need to look at from this question perspective. One is that whether it is creating a breadth, that are we reaching more customers? Are we creating more cross-sell to a customer? I think If you look at the later part has done pretty well, where, for example, most of the fintechs, like they come to us, most of the B2B fintech companies, and we love them for certain reasons for that, because they come with a product or a technology and we understand domain. I think as long as a partnership can create 1 + 1 = 3, it makes a lot of sense. And as long as it benefits a customer. And we have seen these partnerships have done extremely well. What Dhiraj and we just spoke about, the industry actually grew in most of the aspects because of the B2B. I'm not saying that we as the industry don't have technology, but our priorities are different. I think when they come in together, it creates a huge benefit for the industry. I think most of the B2B companies today are pretty active in the broking industry today. I think if you look at, I'm not talking about a B2C company, B2B company, whether it's, if you look at from a portfolio analysis to creating a baskets to creating a global equities, I think B2B guys have done extremely well for us. Another part in terms of a reach, I think in my view is that we are just 2.5 years old in terms of getting that reach, because regulatorily we are getting much more comfortable. Regulators are much more comfortable now. As we speak today, I have seen the evolution for the last 20 years of broking industry, where you have to open a broking account, you have to search for a third floor or a fourth, fifth floor, because we never used to have lifts. Or you need to go to a bank branch and ask for whether you have a broking account, broking services today. Today, things have changed completely. Last 4 years, your client acquisition has become Bharat today. For example, we do get a customer from a Siliguri to the end from a smallest city in Kerala, which may be a Kasaragod somewhere. No, this is the type of Bharat we have. If you look at last 1 year's number in terms of client acquisition itself says that we have reached there.
Okay.
Now, problem is how can these customers can adopt? How are the platforms are becoming more intuitive to make sure the customers are able to transact with us? Now the industry is looking at and saying that, can I partner with B2B, or do I create a large analytical tool so they can reach the end customers? I think a lot of work in progress there. My belief is that we just started our journey, because digital has taken us to Bharat, because physically it was just impossible. How many people you can recruit and tell them to go and find these customers, right? Digital has changed the way we work in that industry today.
Right.
I just, for example, somebody opens 1 lakh account, can't even imagine, because in our days we used to open 1 lakh in 1 year. And that too, if you open 1 lakh account 1 year, it is like a big celebration in the office. Today, if you look at every broker opens 1 lakh account, like, and I wonder how they open 1 lakh, that's a different story. But 1 lakh account is opened, and somebody says I've opened 10 lakh in 1 quarter.
Right.
I just wonder that how many people are in the markets coming in. I think to cut short my conversation, what I'm saying is that, yes, digital is creating Bharat for us. I think acquisition is happening. In terms of what is happening last 2 years, that our ability to reach out customers is much higher, because we have now different set of products, which helps the customers to take decisions. So I think B2B fintech companies are helping us to build that environment. I think there's a large change happening in this industry for the last 2 years.
Okay.
I think one of the game changers in this respect, especially during this COVID period, has been the dependence on technology for delivery of each and every product at your home. I think it has been a phenomenal, whether it's Amazon, Flipkart, or Swiggy, or whatever you name them. This has really, I believe, the customer, especially those who are not very tech friendly, for them, trust on a mobile or on an online trading. That was a very, very important aspect. And this COVID, although it was gaining already, but I think this lockdown of 1 year plus has really made this technology trustworthy. It has gained the trust. If you ask me, it has gained the trust of people. And this will give a very long way in adoption of technology, in propagation of all the financial product. I believe that's amazing. And I believe, be it 70 years, 80 years, 90 years, that confidence of, yes, it can be delivered at home, it can be done it, there's nothing big thing about it. I think that trust is immense, which the current situation is sadly, but it has really helped this digitalization in a big way. Of course, not to say about other mediums or the social media today, the only connect which we have, which everybody has, is a social media with each other. I think amazing things has happened this year. It has changed the entire scenario of a digital world.
Valid points. Mr. Chandok, all of you have come a long way, and witnessed the traditional shift and the digital shift. But there are fintechs coming with only mobile view or mobile app, and they have like even millions of customers. You look at Zerodha. There are millennials who don't know what Sensex or Nifty 50 is, but they know what Zerodha is. And in fact, they have started, trading as well there. So how do you look at these new models? Obviously, many of you are already partnering with them, but these new models looks like they're self-sustainable models and they're growing far more aggressively. So are you looking at it as a competition? Do you think that maybe it will be tough to compete with them in near future, or they will have a different class of people who will just shift on their mobile applications and you will have a different customer segment altogether?
No, I would say that it's an evolving story. I would watch all the developments, and I am watching all the developments with a lot of care. And I find that there is a lot of interesting stuff happening across. And if I were to sort of basket them into different areas, I find that there are certain fintechs who have identified a problem and provided a great solution to it. It's just that companies who are otherwise having those problems have just not been able to solve them themselves because it's just not formed a part of their sharp focus. And this company, a smaller company, has focused on that problem and actually gone and solved it. Then there is another bunch of companies who have created fantastic experiences for customer. It's the same stuff that is being done, but done in a very cool manner, if I can use that word. And customers love it. So you have problem solvers, you have great experienced companies, and then another set of companies who have emerged who are plain Jane execution focused, right? Very easy to do. Nothing sort of value additive beyond that, but the whole journey and experience is very simple, very easy. So it demystifies. So you've got all kinds of categories, at least 3-4 kinds of categories that have emerged. Right. I can clearly see that in certain categories there is an opportunity to collaborate.
Right.
Certain categories there are opportunities to sort of engage and maybe even inorganically buy them out. We can see that kind of stuff happening in the industry. There are many examples. And in certain categories and certain segments, it would be competition, at least for a segment of your customers, right? So I think it's an evolving game, and it is very exciting actually to be in the space while all these developments are taking place. If we were to probably have this chat 2-3 years from today, I think the scene would be pretty different, both amongst the new age players as well as the existing players who've been very technologically savvy for a long period of time.
Right.
I think you're going to see a completely new breed of stuff emerging, which will probably compete with each other, and the best of the best is only going to emerge going forward. So I can clearly see consolidation emerging in this segment.
So I think just watch is ticking, but I will still, before I wrap up, we'll take one question with all of you. And we'll start with you, Mr. Relli. The question is in 2 parts. Obviously, the wealth tech companies are also increasing. That's what I asked Mr. Chandok as well, and he just answered that. But if I could quickly take your reaction on one part, that going ahead, what kind of changes do you see specifically in the wealth tech area? Because your customers will also ask for generating more wealth, and that too digitally. So how do you see that segment in next 1 to 2 years? That is one part of the question. And second part of the question is related to current situation. Despite pandemic, we have seen the Sensex, Nifty, or all the top indexes being, really high. Sometimes they are volatile, but again, they are absolutely, they are very bullish in terms of, or they are ascending far more aggressively than many other markets in the world. Also, the mutual funds have performed well. So my second part of the question is, what next from here do you see specifically for the customers who are relying on this kind of wealth? So one question is, where do you see the wealth for the customers digitally? And second, in this pandemic situation, how do you see the wealth areas or asset classes for the people?
So straight answer on the wealth tech, I think there is no other substitute but to adopt the technology for everyone, whether you're a traditional player or a fintech player. Technology is the big enabler and will be a key differentiator. So better user interfaces, more value-added products, simple execution, and tracking of their investments will be the differentiator. And you have to work on these technologies. And we have to adopt beyond this artificial intelligence, blockchain, to keep continuously evolving in terms of adding value to the customer. So there are no two thoughts about it. And all of us are aggressively investing in this space. And you will see mobility to the next level. You will see different interfaces, different platforms coming in from all players, including us also. As far as Sensex and Nifty are at almost, high levels, they are just about 10% or 15% away from the all-time high levels, despite the long-drawn pandemic. I think what is driving the market is that we are seeing that after a tough last year, this year earning growths are picking up. That's something is very much visible. If we have only a quarter's blip, that is Q1 blip only, and we move forward from the second wave, and we have only limited third or fourth wave, then the earning growth is looking good. The GDP growth is almost near. Everyone has projected GDP growth also to a near double digit only. I think the long-term prospects in India is what driving the market. That's one. Second thing is that we've seen that more and more players are looking forward to participate in the market, and retail share in the markets have been increasing. Other than the FIs and domestic institutions, I think the contribution of retail is also adding fuel to the fire in the market. So some of these factors are driving the market. My message to the investors is that do invest in only fundamentally strong companies. If you do not understand trading, if you do not understand speculation, stay away from the speculation. If you must, then you do your own study first, learn it, and then use speculation.
Okay, thanks, Mr. Relli. Mr. Pangtey.
Well, it's really the economy where it's going, and stock market. There's so much we read around us. Of course, I can't predict the future, and very difficult. Nor will I try. But looking at the HNIs and ultra HNIs, we have taken some steps to cater to this segment, especially on our PMS platform. We have two differential discretionary products which we are offering. One is LIC Mutual Fund Factor Advantage. It is designed to have this risk-weighted stock selection, which tries to capture the benchmark and returns with a lower risk. And of course, mix the passive and active, making the product more competitive. So this looking at the market, we have launched this product, and very soon we'll be launching another product, which is named as LIC Mutual Fund All-Weather Asset Allocator. Basically, it's again a multi-asset strategy to deliver higher risk-weighted returns, and it will be invested into equity, bond, and the gold. So this will basically focus on the returns that will be risk adjusted. So these two products, which we feel, because more and more HNIs, of course, the PMS, many people have burned their fingers. So this is two proactive steps which we have taken. Of course, my learned friends have already said about how the market looks like. I would not like to comment or venture into it, but to the segment which looks at it probably differently, especially the ultra and HNIs, we have these two products which we'll be offering.
Okay, Mr. Chandok.
It's a very tricky question, Amol, I must say so. So let me attempt to answer this question exactly the way you asked, and you said that next couple of years, and you said wealth. So I'm going to focus my answer around the next couple of years and around wealth, which is effectively the HNI segment. I think when I look at these segments and I look at the time frame that you mentioned, I would think that there would be some very imaginative marriage of digitalization in this space. The wealth customers, I find them, they tend to prefer a physical interface despite all the stuff that has happened. Therefore, at the same time, there is so much of massive evolution of digital stuff that is possible, marrying that with analytics, machine learning, artificial intelligence, and all of that. I can see, a good confluence in marriage coming place where all of these technologies assist maybe a voice at one end, a human voice at one end, or it could be a human interaction at one end, and then bringing a confluence of both of these in form of an offering to the wealth customer. I can see that happening in the next 2 years. And my sense is that the customers are going to love that. It's going to become, therefore, a lot more efficient and low cost, relatively low cost. With respect to the stuff on the markets, I'm a great fan of asset allocation as a concept. So I would still say that let's not go and double guess what's going to happen to the economy, what's going to happen to the markets. It's important to understand the customer, his priorities, his risk appetite, and broadly split the portfolio into two boxes. One box where you tell him that, boss, this is your core allocation. This is your stuff that, we would rather put it in stable asset categories and stable, which you give you more stable, predictable returns. And then there is an alpha generator. This is the extent of wealth you can put aside for, beating the markets or attempting to beat the markets. And then provide, based on the risk appetite, a choice of segments to invest in, which achieves that objective. So I believe it's going to be a combination of that, is what we would tell some of our wealth customers.
Sure, Mr. Chandok and Mr. Gopkumar, your views.
Yeah, we just spoke about HNI and the whole HNI space. Let me concentrate on the mass affluent and retail. My belief is that what we are offering today in the mass affluent and the retail, I think wealth tech will change. More and more products will get digitized, which is available for HNIs, will now available for retail. I think that's what will change drastically, and which will help even the retail customer to participate. I'm a great believer of Bharat. It will give me a large democratization of products will happen. I have already seen a couple of products which is coming up, which was impossible to think through. For example, if you had to onboard a PMS customer with a custodian, it will take 20 days. You can open as fast as a day's time. You can open up the whole process today. I think large customers today, products will come to retail, and that will help us to reach large customers through digital, and technology is the only answer for that. Now, obviously, everybody spoke about asset allocation. I think that will change the way retail and mass affluent will participate. I think today they are largely skewed towards friends and family advices. I think platforms will come in and say that, okay, these are the platforms, these are the products, these are got ABCD risks, and customers will be able to choose the risk and able to deliver that risk by the platforms. I think that's what will change in terms of asset allocation. In terms of markets, I think my belief is simple. It's all about liquidity. I think over the years, we look at markets very clearly. When the interest rates are down in India, then FD gets 5.5%, 4.5%, post-tax of 4.5%, you still find money flowing to risky assets, believing that it will get better return than FD returns. I think that's what is happening in the country today. There's huge participation just because that they don't like FDs. Second is obviously there are some disposable income much higher because people spend so much lesser today. They're also having some time to come back and invest in the markets. That's going to happen. In terms of advice, I stay on, like every speaker spoke about, that remain asset allocation because I'm the great. I've been attempting to create some financial planning platform from 2003. Not successful. I hope that I will create something in my near future. 2003, I started a division in my Kotak days as financial planning, but people will ask me what is financial planning about in that point of time. I hope this time I'll be succeeding to create something in financial planning. I think that's the purpose of my life, that how can I empower a customer to take a right decision for his money, and he started with money. I think we are driven by brick and mortar. I still say we are brick and mortar. We sell push products based on what our firm requires, not the customer requires. I think there is a huge amount of differences. Otherwise, I don't think an NFO can come and have 3,000 crores of money collected from retail. I think ultimately, when I retire from my financial services career, at least I want to attempt to create a good financial planning model so that customers should get benefited our experience of 30 years in this industry. I think that's my endeavor.
Fantastic. Thank you so much, gentlemen, for sharing your perspective. In fact, that was really meaningful. Thanks for adding the value to the sessions. Thank you so much, Mr. Chandok, Mr. Pangtey, Mr. Gopkumar, and Mr. Relli for being part of ETBFSI Virtual Conflict. Thank you so much.
Thank you.